I'm probably not telling you anything new, but traders are impacted by their emotion. As prices go up, we experience excitement. As they go down, we experience fear. These feelings push us one way or another to make choices, sometimes good, sometimes bad. Looking into the past, we can find some useful patterns. Market tops tend to align when people are feeling the most bullish, and market bottoms tend to occur when people are feeling the most fearful. Being able to identify when the majority of market participants are feeling in a particular way could be the key to timing reversal. This is where the fear and greed index comes into play, but it's not a perfect system. The crowd isn't always wrong, because if they were, then they wouldn't be trading. Also, in exuberant price action, markets are behaving really irrationally. We don't know when the bubble will burst. It'll just happen at some point. The key that I've found to mitigating these obstacles is integrating some objective form of technical analysis as a timing trigger when you're at these sentiment extremes. With that in mind, let's get into this week's analysis. The sentiment charts for BTC, gold, and the 30-year bond futures contract don't have any predictive elements at the moment. Measurements on bonds are up, gold is unchanged, and BTC is down, though they all generally have bullish sentiment. It's perfectly fine to stop the analysis here and not take anything else away from these charts. The important part to this type of analysis is really behavior of prices around the sentiment extremes. Half the expectations from last week played out. S&P futures chart is up in the greed zone. Now would be the time to watch for bearish trade signals. Both the daily and the weekly chart are showing bearish divergences, meaning prices have set new highs, but momentum is not following. The daily chart is showing more strength than the weekly chart in terms of momentum. It will probably still be another week or two before we get some bearish trade signal. The weekly chart is showing multiple oscillators and bearish divergence, but this signal can extend for months. I imagine that when the signal does play out, it'll be the general market top and we'll have quarters of bearish behavior. The US dollar index is a sentiment that didn't play out from last week. Measurements are up, but it doesn't have any predictive elements at the moment. Bringing in technical analysis, there's some resistance forming around the 106.5 level. I'm watching this for a potential breakout. Ideally, this occurs with a bearish signal on the S&P charts. The technicals on the Dixie do appear generally bullish, but there's not really a lot of clear definition. So it's kind of a wait and see game. Now is the time that I'm actively looking for signals to take profit on my older long position. Simply put, the market is at new all-time highs, retail traders are extremely bullish, and volume and momentum are both declining. As I explained earlier, these are the key factors that all occur around market tops. If you have no exposure, I know it's really hard to sit on your hands and watch the market continue to go up, but if you wait for increased volume and momentum on the S&P chart and a breakdown of the dollar index chart, that will make a much less risky option for you to enter. Remember, we don't want to get sucked in and make an emotional decision just for a buck. Prices can be very irrational and run up even when technicals are showing that the market should roll over. You need to define for yourself some clear and objective reasons for invalidation. For me, that's new highs of momentum on the S&P daily chart and a breakdown from the Dixie at the 104 level. At that point, I'd entertain new bullish trade ideas.
If you haven't yet, join the Discord. You can see the daily updated sentiment levels, talk through your ideas with other traders, and process the markets with me. Otherwise, I'll see you next week.